Yeah, good morning, everyone. So, US market had shown good improvement in last 2 days, and S&P 500 is near to their 3-month high. Uh, the US market is mainly driven by the positive news on debt ceiling. The thinking is that there could be resolution before the deadline, and same is being factored into the market. Apart from that, futures are also marginally positive for the US market, whereas Asian markets are seeing some mixed trend. Most of the market are positive except China and Hong Kong by almost around anywhere between 0.25 to 1%. In commodity also, there is a mixed trend. Oil is marginally up, whereas the other commodities are seeing some negativeness, whereas iron ore is down by around 1.5% and steel by around 1%. So there is a mixed reactions from the world, and the key thing is dollar index is showing some positive movement, and which is putting some pressures on the emerging market like India and all. So that is the only thing. Otherwise, US market are giving some positive indications. So overall seems we had seen some corrections in last few days. So we may stabilize and may see some positive trend also in today's trade. I'll request technical team to take up from here.
Yeah, thank you, sir. Good morning, all of you. See, yesterday, weekly expiry, we saw that Nifty sustained the important level, that is 18,100. If Nifty managed to sustain these level, then we expect further upside move towards 18 to 40 and 18,300 in upside. Today we expect open a positive note, but we see the today's weekly close near the 18,170, 200 to 40 level up. Then we expect next week rally towards 18,300, 18,370 mark. Below 18,100, then view is cautious. If Nifty weekly close below the 18,100, then Nifty drag towards 17,970 at downside and 900 at downside. The today's close is important. If Nifty managed to sustain 18,100 and 18,240 in upside, then we expect further rally for next week. Bank Nifty also facing the resistance around 44,100 and 44,000 and upside. If Bank Nifty break that level and make a new high, all-time high, then we expect further rally towards 44,430, 44,740 and upside. Next immediate support place around 43,450 at downside. Below that 43,120, 43,000 at downside. Nifty Finance also facing the resistance and upside. First immediate resistance place around 19,400. Above that we expect further rally towards 18, 19,519, 19,820 in upside, and intraday base immediate support place 19,170, 19,750 at downside. So all three index trading the near the resistance zone. If clear that resistance, then we expect further rally. In stock specific, SBI card looks positive at current level. We expect some positive in SBI card. Last 3 weeks we saw that positive momentum in SBI card. It will be the continue with stop loss 870, upside 920, 930. Next immediate target for SBI card. Biocon also looks positive. We already given call in Biocon at current level. To expect momentum to be continued towards 200 DMA, that comes around 260, 264 upside. Support place around 240 to 38 at downside. That's it for technical. Derivative guy can carry.
Yeah, thank you. Good morning, everyone. So on the derivative front, as we are seeing that the OI positions are currently like the supportive zone has been placed at 18,000 to 18,100, and on the upper end 18,200 and 300 we are seeing that the Colorado positions are added up. Currently we are seeing that from past three trading sessions, Nifty is facing resistance, and we are seeing the supply being witnessed for Nifty coming near 18,300 level. So 18,300 clear, 18,300 level clearance is very much necessary for the further rally towards 18,500 level. As I said yesterday also, that till the time Nifty put right up positions at 18,000 level, it is not getting shifted on the lower end. Till that point of time, we might see some pullbacks from the supportive level. So still the market strength is positive because of the pressure which we are seeing from last 3 days. In that scenario, we are seeing that the India VIX is not going above the resistance zone of 13.5 level. India VIX is coming near 13.4, 13.45 level, and again we are seeing that India VIX is getting a dip towards the 12.5 to 12.8 level. Yesterday also we have seen that the Nifty got on the selling zone of around 50 points, and still India VIX decreased at that point of time. So India VIX is holding on a positive zone. Till the time India VIX is holding below 13.5 level, till that point of time, we might expect the market trend to be positive. As we are seeing the FI front also from past 1 to 2 weeks, we are seeing the FIs are continuously into buying zone. So hold your long position with the support of 18,000 level on the options front. Once if you put right a got liquidated and get shifted towards 16,800 or 700 level, then only if a short position need to be converted, or else we might expect the market to be rallied towards 18,300 level, and about that 18,500 to 600 level will be witnessed in the market in coming trading session. On the stock specific front, we expect PVR, Balram Chini, and Bandhan Bank. Each three counter has seen some short covering rally from past two trading session, and we expect the short covering to be converted into fresh long in next 1 to 2 trading session. So keep watch on this three counter. That's it from the data to front. Thank you.
Good morning. On the result side, SBI result was marginally above expectation because of lower credit cost. NIMs improved 10 basis points to 3.6%, and bank has said that they don't expect any significant decline in net interest margin because it is holding excess liquidity of 4 lakh crore, so it won't need to aggressively raise deposits. Advances grew 17% year on year, and the bank has said that going forward it will increase by 12 to 14% in current year. On sequential basis, OPEX grew 22%, which impacted the operating profits. But as I said, the credit cost had declined to 40 basis points compared to around 70 basis points seen in last few quarters. And we remain positive on SBI. PNB Housing Finance result is okay. Operating performance was weak, but again, lower credit costs and improvement in asset quality was good. There was some decline in spreads and higher OPEX, which led to weak profit, operating profit. Credit cost was at 0.9% for the quarter against last quarter 1.6%. AUM was flattish as corporate book is continuing to run down, and on the other hand, retail book grew by 10% year on year. Bank has guided that overall loan growth will accelerate from almost 0% to 17% by end of this year. We have seen that momentum is picking up on the disbursement side, so this is achievable. So we are positive in the long term due to retailization of loan book, which has now reached 94%, and corporate book is now just 6% mix. Although there is still some asset quality issue over there, but we think largely that is behind. And also, as the loan growth will accelerate, market will be willing to re-rate the stock. Sirma SGS technology result is above expectation. Revenue came at 680 crore versus estimate of 570 crore. So a big beat on revenue side, and it increased 33% sequentially, 83% year on year. EBITDA came at 59% versus expectation of 53 crore, 59 crore versus expectation of 53 crore. EBITDA margin came at 8.7%. So margin has seen a decline, and that has been the trend in this stock since last few years and quarters, that margin is coming down although loan growth is accelerating. And profit adjusted for normalized tax rate would have been at 51 crore versus estimate of 44 crore. So possible that in the short term there can be some positive reaction in the stock. A whole sector is witnessing good tailwinds, and these companies also beneficiary of import substitution for PCB assemblies as well as export growth. So as I said, although top line growth seems to be very attractive and high for the full year also, but for Sirma, the margins are coming down, so one has to be watchful and cannot just extrapolate top line growth to the bottom line as well. So in this sector, we prefer Canes and then Sirma with respect to the EMS sector. I'm talking the contract manufacturers. Thank you. That's it from my side.
Good morning. Tata Elxsi has posted below expectation numbers for the quarter, with revenue coming in at 837 crores versus expectation of 868 crores. Lower revenue also led to lower EBITDA, which came in at 249 crores versus expectation of 256 crores. However, PAT came at 201 crores versus 193 crores and QQ of 194, which was led by higher other income. Stock is trading at a PE of 51.1 times FY24 EPS. Thank you.
Yeah, good morning. Ramco Cement result was above expectation. Sales volume came in at 4.7 million ton versus expectation of 4 million ton, which led to a 28% Q on Q revenue growth. EBITDA per ton stood at 878 versus expectation of 786, mainly due to reduction in power and fuel cost and higher volume. Margins have also expanded by almost 200 basis points to 16.1%. The company has its con call today, where further details are awaited. Jindal Stainless had its con call yesterday, wherein the management has guided sales volume to grow by 20% in FY24 and another 22 to 25% in FY25. EBITDA per ton is likely to be in the range of 19 to 21,000 for FY24. The company is likely to complete its acquisition of Jindal United Steel by the end of June, which is likely to add another EBITDA of rupees 800 to 850 crores. Going forward, the export market has opened up and the company is seeing good inquiries and can expect good export orders in FY24, which will lead to a better margin. So the outlook remains positive for Jindal Stainless. Thank you.
Good morning. Clean Science and Technology Limited posted results, and results were broadly in line with expectations. The revenue grew by 6% YOY, which was mainly driven by the performance chemical segment, which grew by 9% YOY, whereas other segments in total were flat, has shown the flat growth. The EBITDA margin reported 48.5%, and it has impacted on the back of falling RM prices and broadly stable FG prices during the quarter. The same is expected to reverse in the upcoming quarters. The total capex of FY23 was stood at rupees 1.9 billion, and the management has guided for a capex of rupees 2 billion over the next 2 years. The stock is trading at a PE of 46 times to FY24 EPS, and the outlook is neutral. The Gujarat Narmada Valley Fertilizers and Chemicals Limited result was okay. The company, the revenue reported at 2,271 crore, which degrew by 18.1%. The performance was higher in chemical segment, mainly due to lower input cost and lower fixed cost, which was partially compensated by both lower volume as well as sales realization. On a 12-month basis, the performance was lower in chemical segment, mainly due to increase in input cost and fixed cost. The EBITDA margin reported at 16.2%. Versus 32% YOY. Adjusted PAT reported at rupees 336 crore versus 643 crore on a YOY basis. And the stock is trading at a PE of 6.5 times to TTM EPS. The PI Industries Limited posted result, and result were below expectations. The revenue grew by 12.2% YOY at rupees 1,566 crore. There was a 15% growth in exports led by price, currency, and favorable product mix. And domestic growth was stood at 1% YOY, which was driven by a volume increase of 2%, and that offset by price decrease of 1%. The EBITDA margin reported at 22% versus expectation of 24.7%. This the stock is trading at a PE of 33.5 times to FY24 EPS. The further insights are waited from the con call scheduled today. The ITC Limited result was broadly in line with expectation. The quarter revenue grew by 5.6% YOY, which was led by a strong performance in cigarettes, FMCG and others, and hotel businesses. Cigarette business revenue grew by 14.2% YOY, which led by strong volume growth. FMCG others segment also reported robust growth of 19.4% YOY. And it has shown the growth of 10.9% on a 4-year CAGR basis. The growth in this segment was driven by staples, biscuits, snacks, noodles, and beverages, while agribusiness revenue declined by 18% YOY, as the base quarter had wheat exports that were banned during the current year. The paper boards, paper and packaging business reported 1.8% YOY growth, while hotel business reported 100.6% growth. The EBITDA margin reported at 37.9% versus the expectation of 36.8%. The FMCG segment shown the EBITDA margin of 10.1%. Agri segment EBIT margin expanded by 300 basis points YOY to 8.6%, and hotel segment EBIT margin stood at 25.5%. The stock is trading at PE of 24.9 times to FY24 EPS, and the outlook is positive on the stock. Thank you.
Yeah, Gland Pharma has announced the result, and the results was not good. It was impacted by various reasons, including one of their production line was shut down for maintenance. But the key concern is the pricing pressure which they are facing. The pricing pressure is very steep from Chinese company in API, and that has impacted both sales and margins. Apart from that, one of their customer has filed for bankruptcy in the US, and which may have impact in the next quarter on their sales volume. Though, apart from that, one of their customer has shifted their production from the company to some other player, so that will also have some negative impact in this quarter. So next quarter is also likely to be subdued. So the near term, the stock may see sharp corrections in the near term. Then United Spirit has reported good numbers, though apparently it looks like a bit operating margins are at similar level, but the company has done large ad spend, and that has resulted into EBITDA margin coming down, whereas the gross margin has expanded substantially. The gross margin has come up at 45.5% versus last quarter 40.6%. So sharp jump of almost around 500 basis point. To utilize that, company has done large ad spend, and the EBITDA margins remain more or less what was on the expected line at around 13.6% versus 13.3%. Even on the volume side, the prestige and above had shown very good growth, where the company is key focused, and it has increased by almost around 9.9% as compared to last quarter 3.1%. So though the other segment, that popular segment, has shown decline, but overall the volume has grown by around 3% year on year. So results are quite good, and may see uptick in today's trade. I'll request commodity team to take up from here.
Yes, sir. Thank you very much. Good morning, everyone. So yesterday we had seen gold and silver prices are correcting, and it may correct further. Though the pullback is expected, gold one can expect 60,000 on higher side, but again selling pressure could come in. So sell with a stop loss of 60,200, and lower side 59 700 to 500, and further weakness could be witnessed below 59 500. So watch out for that. Silver also prices can pull back till 72 600 to 700, and again selling pressure could come in. So sell with a stop loss of 73 200, and one can expect target of 71 700 to 71 500 on lower side. Crude oil, one can initiate a buy around 59.40. Uh, Keep a stop loss of 58.70. On upside, we are looking for resistance area of 6,500 6050 levels. And yesterday crude oil, natural gas, we had witnessed crossing the 200 resistance zone. So buying on dips is recommended by around 210 to 208, and maintain a stop loss of 197. On upside 230 to 235 is the target we are looking for. Copper prices should hold 714, and bounce back till 723.25 levels. So could be in a range bound, but weakness could continue if sustaining below 714. Similarly, zinc also prices are resisting 225 to 27 zone, and selling on rises recommended, and on downside 222 220 is expected. Thank you very much. I'll ask Utkarsh to take over from here.
Yeah, thank you, sir. Very good morning, all of you. In US, we witnessed a very strong moment yesterday from the lowest levels around 682.30 levels. So one can initiate long position if we get any profit bookings around 82.65 levels or 82.60 levels. So one can initiate long position with the SL of 82.50 levels for the target of 82.98 levels and 82.85 levels. In JBPNR, one can initiate short positions around 102.81 levels for the stop loss of 82.99 levels. 102.99 levels, sorry, for the target of 102.48 and 102.37 levels. If price in JBP if price breaks and close below 59.70 levels, further downside open till 59 levels. So one can look out through these levels, and in Euro NR one can initiate short positions around 89.3 to 89.40 levels. The stop loss of 89.55 levels for the target of 89.01 and 88.90 levels. Thank you.